Hello there and welcome. Thanks so much for joining us today. I'm Sam and I'll be behind the scenes throughout this presentation moderating. If you find you have any questions while Michael Corgett is speaking, please feel free to use the Q&A box that's down below. It is completely anonymous and I'll make sure one of our financial advisors can answer those questions with you directly after the presentation has ended. Today, Michael Corgett is going to be speaking to you about the best and worst places in the United States to retire in 2025. He'll give you some really great insights on that. And I apologize in advance. He will not have time to answer any of questions live with you today, but as I mentioned, someone will reach out afterward. I should just remind you very quickly that we are not affiliated nor endorsed whatsoever by any specific company. We are not your company. We are not endorsed nor promoted at all by your company. We are a completely independent group of financial advisors here. And next, please consider following us on YouTube and LinkedIn. We post tons of retirement-focused content each week, and we really think you'd get some value out of it if you considered giving us a follow. And lastly, you can find links either right above our heads there, or if you're watching us on YouTube, you can find a link in the description box. Those links will guide you to the calendar where you can book an appointment with one of our financial advisors. It is a complimentary 15-minute block of time to get started or updated on your retirement planning, and we'd be thrilled to help you with that, as that is what we do here. And that is it actually for me. I'm going to now kick it over to Michael Corgett.
Thank you, Sam, and welcome everyone to today's presentation. Today we're going to talk about some of the things that retirees definitely want to consider as part of their overall retirement plan. First, we're going to talk about some of the tax considerations at the state level, as well as property taxes, the overall cost of housing, where it's easier and less expensive to own a home versus where it's a lot more expensive to consider owning a home, along with the cost of living in various areas, which does include taxes as well as other expenses. And then finally, the cost of healthcare in various states. So again, today we're going to review some of the benefits of states A, B, and C versus D, E, and F, just to give you an idea of what might make sense, and obviously just to give you an idea of what is available. A lot of folks don't understand where opportunities are better in some places than they are in others. So let's go ahead and dive on in. First, again, we're going to talk a little bit about taxes, understanding state tax rates and personal property tax rates. There are several states here in the union that have zero state income taxes. One of the ones that are probably the most popular are the states of Texas, Nevada, and Florida. You've got a couple out west in Washington and Wyoming, South Dakota here in the Midwest, New Hampshire. Nobody ever probably thought of that. And then if you want to retire in Alaska, that's an opportunity. And Tennessee is a state that is growing significantly, both in the major metropolitan areas as well as in the mountains in the eastern portion of the state. And then there are states, obviously, with very high income tax rates. One that comes to mind naturally is California, but New York and New Jersey are way up there as well. And these are the maximum state income tax rates in those various states. So you could go from 0 to over 10%, considering where you live, or where you want to move from when you retire from state A to state B as part of your overall plan. Here's a chart that shows a graph of the state income tax rates across the board. Obviously, the red states are the ones that are the highest. You see on the West Coast, Oregon and California, and on the East Coast, New York and New Jersey and Massachusetts are very high. In the Midwest, obviously not so much. State income tax rates are lower. I mean, we're talking 4, 5, 6% in some cases versus 8, 10, and 12%. Again, just something to consider. What state do I want to retire in? And the gray states are the states that obviously have no state income tax rate. And I have a number of clients over the years who've decided to move to either Texas, Tennessee, or Florida. I like going to those states to visit those clients because they're very nice and obviously warmer in the wintertime too, which is a definite consideration if you no longer like the cold. Property state, property tax states. Alabama, one of the lowest, on average, less than $1,000 annually. New Jersey, typically one of the highest, $9,800. I live here in the Midwest in Illinois, right next door to us, has very high property taxes across the board. Versus, I live here in Missouri, which doesn't have nearly as high property state tax rates. Here's an example. David and Susan in their early 60s, considering retirement and the impact of property taxes and sales taxes on their retirement income. Alabama does make more sense than moving to New Jersey. That's just a given, as the example just showed. And here is again a graph that shows you the state property tax rates on average. I mentioned Illinois. Ironically, Texas has a very high property tax rate, but they don't have a state income tax rate. Florida, not so high, but also no state income tax rate. There you see Tennessee as well. The purple, it's going to be more expensive for property taxes than some of the lighter blue states. Finally, again, something to consider as far as your retirement. Let's talk a bit about housing and living costs. Housing is a major factor and a major cost in retirement, especially if your home is not paid for. Now, if your home is paid for, you have a lot of options, especially if you want to sell it and move to another state. Housing in general has been increasing over the years, very significantly in the last several years. But there's also some changes in mortgage interest rates. Affordable housing, again, more reasonable in the Midwest. In this example, Arkansas, very inexpensive versus California, very expensive. I mean, look at that difference. We're talking more than fivefold for basically the same type of home in this example for you to consider. Again, couple, 60 years old, Alex is debating on retirement, just deciding where he should go. He thought about California, but his dollars just won't stretch as far. So he's going to consider Arkansas as a better opportunity. He gets more bang for his buck as far as the cost of a home. And here's a graph of an example of the housing prices across the country. Again, the East Coast and the West Coast are much higher than they are in the Midwest. Many of those yellowish, orangish areas are major metropolitan areas. I know Las Vegas, Denver, Colorado are considerations much higher, very booming areas. That little area there in the Midwest is Nashville, Tennessee, Southern Florida, obviously the coast, very expensive to live on. And you have insurance and hurricane considerations when it comes to Florida and the Panhandle, and obviously even the coasts, all the way up the East Coast, as well as Texas, Louisiana, and Mississippi. Retiring overseas. I do hear people talking about this, considerations. I know people that have moved to Panama. I know people that have moved to the Caribbean. You do get a lot more bang for your buck as far as housing is concerned. In many of those areas, the cost of living is a lot less. It certainly can be an adventure for you to consider, whether it is the Caribbean, Central or South America, Southeast Asia. I know people that are moving to Vietnam and Thailand, or Europe is a consideration. It would be interesting, is what I would say, to consider. There are pluses and minuses living here in the States. This may be where your family is. You want to be closer to your grandkids, but it is something that people do and you may want to consider. And then mortgage interest rates, I mentioned earlier. Mortgage rates are definitely a lot higher now since the Federal Reserve has raised rates. On average, mortgage rates are over 6%, which is a crucial factor if you have a loan on your home. Many of us got loans or mortgages 3 and 4 and 5 years ago when rates were below 3%. I fortunately am one of those folks. I'm certainly not going to sell my home and move somewhere else and double my interest rate, which is going to significantly obviously raise my payment. So a lot of retirees and near retirees are not considering selling right now because of the cost of getting a mortgage on a new home, plus the cost of homes in general. Your home has risen in value, but wherever you want to go, whether it's a neighborhood 10 miles away or a state 10,000 or 1,000 miles away, the value of the homes in that state have gone up too. And with higher mortgage borrowing costs and then the cost of property taxes as well, that these are all considerations as far as your overall retirement is concerned. So prioritizing healthcare in retirement, inflation's role in retirement, and then key considerations. The best healthcare. This is probably one of the most important things too. Healthcare costs in retirement, especially if you're not 65 yet and eligible for Medicare. Healthcare insurance does cost more in some states versus others, as you can see here. The Midwest is typically cheaper than the East and West Coast. But I'm not going to say selectively that those are the only places where healthcare costs are higher. I mean, they are higher in Illinois than they are in Missouri. So again, some considerations for you to have. Healthcare is obviously a lot more controllable once you reach Medicare eligibility. You've got your Medicare Part D and Part B and D insurance premiums, and then whether you purchase a supplemental or a Medicare Advantage plan, those are typically priced competitively across the nation. So again, healthcare, a third consideration that you want to have. And inflation has been significant over the years, as you can see here, from 0.1% to actually over 9% a couple of years ago. Thankfully, Social Security does have a cost of living or a COLA benefit built into it, 2.5% for this year. A couple years ago, Social Security benefits rose by over 8%, back when inflation was over 9%. So at least Social Security can help you keep pace with inflation. Most pensions, most private pensions, Fortune 500 companies do not have a cost of living benefit built into your pension. So what you collect today is what you're going to be collecting 25 years from now. Keep all that in mind, and what you choose to do for yourself in retirement is very important. What you choose to save for yourself in retirement does make the difference between an average retirement and an exceptional retirement. So a lot of things to consider. I like to say, do you have a plan? Well, if you're already retired, I hope you already had one or have one, but certainly visiting with an advisor like myself just to make sure you are still on the right path. If you at or near retirement, let's just say 2 to 5 years, a plan will definitely give you a good roadmap as to whether you're on the right track or not. Take advantage of this, because a lot of Americans don't have a plan at all. Give us a chance here at the Retirement Group. We are a group of advisors all over the United States who understand your employer benefits programs. We understand that your employers pretty much overall. We've been working with many of them for many, many years. We've got a great deal of experience. We're happy to put together that complimentary financial analysis. All you have to do is ask. You can send us an email by sending us an email to info@theretirementgroup.com. Give us a call, or just scan this QR code and you can get on my calendar or the calendar of one of my colleagues. And in closing, just a lot of different things to consider, but wanted to touch on what I consider to be three probably of the most important things: taxes in general at the state level and property taxes, healthcare costs, and the cost of housing. All very big and all very important for retirees. Thank you for your time and have a great day.